LIFO layers. Now, LIFO layers, when a company uses the LIFO method, it may build up layers of inventory from prior periods. We use the assumption that prices are increasing because in reality, like I said, they do that over time. It's important to remove these lower cost layers as they essentially create a bubble that will eventually result in an irregular, massive net income amount. So if you're saving a bunch of pieces of inventory that are just really cheap because they were bought so many years ago, and you essentially sell them all at one point during 1 year, you save them for 20 years or so, you're going to have massive net income for 1 year because it was a bubble, right? Because you're not getting rid of that old inventory. So that's a concern because companies don't, you don't want a company to have a massive net income amount 1 year because that doesn't really accurately reflect like what's going on, right? So this is the process of removing those older layer costs. So the reduction in inventory, that's the whole point, right? We want to kind of like avoid a bubble. So with continually higher costs, these older layers, they're going to be, usually lower costs under LIFO. This is going to cause an increase in profits and in taxable income. So you want to intentionally remove these lower costs so that, and also remember, higher net income is going to increase your tax bill. You want to remove these so you don't get hit with a massive tax bill all of a sudden, when you're not expecting it. And then we should disclose this as well. This is something to definitely be disclosed, important there, for the financial statement users to see. And a layer liquidation occurs when earlier costs, let's say from year 1, are matched against current sales from year 15. So maybe year 1, this is 15 years ago, the costs were a lot lower. These are normal sale prices. We're going to have a massive distorted net income. So this is just the process of removing those layers. Will you see this as much? I just want you to know what this is, because if you see it, then you have a nice background. And to be honest, as we know, explanations can be hard. Good explanations can be hard to come by. Methods to alleviate these layer liquidation problems. So we use the specific goods pooled LIFO approach. A pool is a combination of similar items, so reduction in one item compensated by increases in other items. We use the dollar value LIFO, where changes in pools are determined in terms of dollars, not quantities. Not as crazy here, just trying to really understand that there is a problem because of this, because of LIFO. You can tell that LIFO is the problem child. It's got a lot of other moving parts to it that you need to account for. That's fine. You can still use it. You just need to account for the method and use certain approaches.